the first thing we got to talk about, what the hell is Morpho? And the reason I ask is because a lot of people don't know Morpho is being used more and more now by people in what I would consider more the centralized world, as they, Bill was just talking about it. The Coinbase guys talked about it earlier today. They're all trying to do this DeFi mullet, right? How do I show something on the front end that looks like a trusted, centralized, kind of user interface? But then on the back end, I want to make sure that we can do some DeFi stuff.
Nice to meet you. You can think about Morpho as it's a blockchain, 600 lines of code. It's an open protocol. It's an open market where borrowers and lenders come together. In that dynamic, there's an interest rate that is charged based on the liquidity and the utilization of the capital. So Morpho is a project that's 4 years old. There's 11 billion of assets on the platform. And then since launching with the Coinbase in kind of the DeFi mullet model that you mentioned, we have roughly about 1.8 billion of loans on the platform.
It's pretty good.
Yeah, good start.
Yeah, we were just talking about this right before this, that exact product, lending product. Coinbase spins up, I guess they already had a lending business, but they spin up a retail lending business, cap deposits are at like 5 million or something like that, do almost $2 billion in loans, probably making somewhere between, 15 and $30 million in revenue off that product. That, all of that happened in a matter of, I don't know, probably like 1/10 of the integration costs, if not 1/100th of the integration costs that it would have been had they tried to spin up that business independently. So, I mean, if that's not the power of on-chain finance, I don't know what is. The other cool part about that, I suppose, is the rates they're charging are below market, in fact, right? Because of DeFi's sort of structural cost advantage.
This fucking guy should just be the host. Jesus. You got energy. You got loud voice. You talk fast. This is fucking great. What's Lombard do?
Yeah.
Since you want to talk, let's go. What's Lombard do?
Listen. We've had a lot of, I know the Morpho protocol quite well, so it's been a privilege working with them.
What's Lombard do?
Lombard connects Bitcoin to the world of on-chain finance. So, what's kind of funny about, being at this conference and have the opportunity to chat with all these folks is we're kind of back to the basics of pitching on-chain finance first and then going back to what you can do with it. So I'm a sort of DeFi guy natively. I worked at a fund for, Polychain for 3 years, was focused almost exclusively on DeFi. I worked at a DeFi protocol after that. And, saw this big opportunity, $2 trillion in Bitcoin sitting on the sidelines, collecting dust and custodians and ledgers. And, the thought was we built an entire on-chain ecosystem of financial primitives built upon the same ethos as Bitcoin, trust in math and code, not individuals and institutions. And it would be, if all assets are coming on chain, it'd be silly to not see Bitcoin used in on-chain bar lend protocols, yield products, whatever else. So Lombard builds a suite of infra that connects BTC to the on-chain world, allows you to earn yield, allows you to borrow stablecoins against your Bitcoin. And yeah.
How big is it? Like the on-chain, not just Lombard, but like people doing this stuff?
Yeah, it's a good question. I think there's
hundreds of millions, billions, a trillion.
Yeah, I think there's 150, maybe $200 billion in on-chain protocols right now. So big, but I mean, if Bitcoin came on chain, you could dwarf that in a very short amount of time.
I see.
Yeah.
All right. What are you guys doing at Anchorage?
Awesome. Anchorage. Well, thanks for having me. Very excited to be here.
You don't have to thank me. Thank you for coming.
Anchorage is one of the leading providers of institutional infrastructure in Bitcoin and crypto more broadly. We're well known for being one of the leaders in custody, and we do that for a very broad range of clients, going from VCs to asset managers to protocol foundations, and a very, very broad range there. We're also the first crypto bank to get an OCC charter, meaning we just actually celebrated the 5th anniversary of our banking charter, and that puts us in a very strong position to do things like regulated stablecoins and things like that. And another thing Anchorage does, and this is more where I work, is prime services. So we act as a prime broker in the industry, meaning we do spot trading, derivatives trading, settlement and lending, so all that good stuff. We also serve a very broad range of institutions there. So yeah, we do quite a bit.
All right, but the on-chain stuff, what are you guys trying to help people do with the Bitcoin on-chain?
Yeah, so we are basically a connector between the, let's say, centralized side of things and the amazing work that these guys do. So because whether due to our tech stack or whether due to our regulatory standing, I think we're in a good position to be the bridge here.
I think part of the requirement to be on this panel, you got to be a smooth talker and just, sound good. Jesus, you guys are all good. All right. So when you look at Morpho, one of the questions that I've got is like, you guys go to like a Coinbase, but that is centralized, bringing this like decentralized back end. Are the institutions going to do this stuff? Like, can you go to like a JP Morgan, a Goldman Sachs, name your organization and say to them, hey, we want to do these Morpho vaults, but we want you to use your front end? Or is that actually the advantage that the crypto companies have where they're willing to kind of go into this, wade into the deep end and the institutions are never going to do this?
Yeah, it's a good question. I've been surprised at how quickly institutions are running at this and how quickly they're mobilizing. You mentioned a couple of names there, and I've had meetings with all of them in the last 3 weeks. The entryway into Morpho is, you can think about Morpho in two ways. You can think about the product, and then you can think about the market. The product is a vault, and we've kind of heard a lot about vault, which is this container in which asset managers or asset allocators can change, adjust, and manage risk profiles. So you take the capital in, and then that vault can deploy across multiple or one market.
Okay, hold on, because I'm gonna ask questions that I know everyone wants to ask, but they don't get the chance.
Yeah.
So there's a vault in the cloud, on the chain. Where's the vault live?
You can set up a Morpho vault on the protocol, and we have the software to do that. You can also use a third-party vault like Vita or any other provider, which...
I have 1 Bitcoin. I put it in the vault. It just sits in there like it's in custody, essentially?
So you'll use somebody like Lombard, who are working with Morpho on our Bitcoin smart accounts. So if you're a large holder of Bitcoin, it was very difficult for you to get any type of leverage from that. You had to sell it. It was a tax event. Or you held on to it and you were just looking for some sort of value appreciation. So it was very difficult for you to try and get leverage off that. Now with Lombard's new solution, what you can do is you can get the equivalent of that Bitcoin. You can put it into a Morpho vault, and then that Morpho vault can be managed by one of our curators, a Galaxy, a Bitwise, a Gauntlet, a Stakehouse, and they can manage the investment strategy based on your risk profile. Because everything is open and permissionless, you can see exactly how those assets are being used. And then you also have the ability within the vault, if, for example, one of the curators wanted to change the strategy, add another market, take a market away, there's a safety mechanism in the vault for you to be able to withdraw your assets.
Yeah, maybe I can hop in here and tie this all together a little bit. We at Lombard, we spent the past 2 years onboarding Bitcoin into on-chain finance. We onboarded about 3 billion, but had we have the tech that we just announced today, we probably could have onboarded a couple 100 billion. The biggest impediment, I think, to people bringing Bitcoin on chain is tech risk. They don't want to trust new smart contracts. They don't want to trust brand new protocols. They don't want to trust, even a good looking guy like myself who promises to give their Bitcoin back. They want to trust Anchorage and Coinbase Custody and BitGo with the most battle-tested Bitcoin custody tech in the space. We just announced this product today called Bitcoin Smart Accounts that allows a user to keep their Bitcoin within their own self-custody wallet within a custodian. So Bitcoin stays within Anchorage, under Anchorage's control. You mint a representation of that on-chain that can then be used to borrow stablecoins within Morpho. So this is kind of like, it's the marriage of custodians and on-chain finance.
Now I know why all three of you are up here together. All right, so hold on. So this Bitcoin Smart Account is, I take my Bitcoin, give it to Anchorage. Anchorage leaves it in a custody account, but then I use that Bitcoin as collateral to then go to Morpho and borrow stable coins from it.
Exactly.
Now, here's my question. Let's say that I do that. It's all seamless. You guys are all geniuses. If I go to the traditional world, I just can email like a private banker and they'll give me a loan. And I don't have to worry about it. I couldn't even tell you what the protocol is. Well, all I know is I gave them X dollars. They gave me Y, dollars of a loan. Do we need to get to that point, or is actually that is a bad thing because there's no transparency, there's no trust, there's how do you guys think about this user experience thing versus the technology working?
I think I can talk about that because we actually do both things. We have a credit desk. So folks are all the time pledging Bitcoin, for example, as collateral to us and taking stable coins to maybe do some other trade or something within the platform. I think that the, let's say, centralized Bitcoin credit market and the, let's call, on-chain Bitcoin credit market, I think they're kind of complementary to each other because today they're not entirely connected. Like you will see that the rates, the DeFi rates and the centralized rates, sometimes they can be very different. I think I was looking at Morpho now. You can, I think if you want to borrow stablecoins at Morpho now, we were paying what, like 5.5, something like that %. You can find just completely different rates if you go to like our credit desk, for example. And the reason is these markets are not entirely interconnected. So I feel like it's a little bit like, I mean, these are two rails that will probably operate alongside one another, and we need to find ways to interconnect them as much as we can so that they're kind of operating more in tandem. That's how I see it.
I saw you shaking your head. Yes.
Yeah, I mean, to answer your question in terms of the difference, banks are limited by the hours that they're open, the geography that they operate in, and the liquidity within their own kind of system. If you're on chain, it's 24/7. You can see everything that's happening, and you can withdraw at any time. There's no kind of counterparties or middleman there. So you have to. The big thing about Morpho is like, what's the trust signal? Like when you think about borrowing against an asset. Or lending against an asset. Today, it's over-collateralized, crypto-backed loans. But as we move into the future, we're trying to think about like what are the off-chain signals, such as legal contracts or others, that will allow us to be able to serve under-collateralized loans.
One more comment here. With these, the ideas they're presenting here are not theoretical. This is like very active in practice. Today, yeah. There's a Galaxy report from last year that says something along the lines of about half of all collateralized crypto borrowing happens on chain, which is pretty crazy. Almost as big as the CeFi space.
Say that again.
About half of all crypto collateralized borrowing happens on chain.
That's interesting.
Yeah. And then the other thing I was going to say is right now, if you want to borrow against your Bitcoin, you can borrow about half the cost on chain. Pretty close
compared to posting it as collateral.
Exactly,
okay,
yeah.
So maybe I don't want to do anything with my Bitcoin, but as we tokenize assets and kind of this whole on-chain world starts to happen, you just go right down the line at Lombard and you say, hey, if you can do it with Bitcoin, then we're going to do it with tokenized SpaceX stock or Apple stock or whatever.
You could theoretically. Lombard's not going to do that. We just focus on Bitcoin. There's enough challenges to onboarding Bitcoin that we're going to have our hands full. I think
trying to flirt with the audience and get them excited.
No. It's the truth. It's the truth. But there's plenty of other asset issuers I think Morpho works with.
But I think that's a great point.
Now they're excited. Now they want to talk. All right, go ahead.
No, this is definitely further along the road. But one of the interesting things about tokenization is that you allow these DeFi primitives to be used around tokenized real world assets, which is something that is not that easy to get sometimes in the TradFi world, right? You have all the on-chains advantages that these guys have already mentioned. So I think that when we start to see these DeFi primitives and the DeFi advantage accruing to these tokenized assets, I think it's going to be even clearer why it makes sense to have real assets on chain.
Listen, I'm convinced that we should put the real assets on chain. I've been thinking this for a decade. I actually thought that it was going to happen way sooner. And then I had to shut up about it for like 8 years, right? Because it became obvious it wasn't going to happen as quickly.
Tokenize the world.
See, I know you've been around a long time. There's two phrases I used to say all the time, tokenize the world. And then the other one was the virus is spreading. 2020 kind of screwed that up. I had to stop saying that one. But if you think about this, I guess part of what becomes really interesting is if we tokenize these assets or it's just Bitcoin, okay, I want financial services. So borrowing against it makes a lot of sense. You guys are all working on that now. What I then think becomes interesting is there's this interoperability of a digital asset, regardless of what is backing it, right? Whether it's dollars as a stablecoin, Bitcoin, or a tokenized thing. I hear people even talking about, can you spend a fraction of the Apple share, or can you, in a borrowing standpoint, could you borrow against, a piece of real estate or something like that? And so is it one single asset, or do we actually start to pool this stuff? Like Bill was just talking about, if I understand more of your financial life, now maybe I just give you a loan and it's backed by a basket of goods, which looks a lot more kind of like an unsecured loan that a bank would give you just because like, hey, you're rich. Right. And so this is almost like the best of both worlds is like, hey, if you have money, you get the loan, but maybe there is some securitization that happens on, or like, how do you guys think about that type of stuff?
I mean, today on Morpho, we've got real world assets that are tokenized to the tune of about 800 million. So that's an active market. But the things that are kind of exciting is you think about, like, imagine a large card holder comes to Morpho. And what they want to be able to do is they want to be able to free up paying their merchants on a Friday instead of that, instead of waiting to a Monday. So Visa has all this information around their merchants in terms of balances received. They can see that, an oracle can be read, and then you can develop a market around that to say, hey, I'm going to lend against that. Like, I know that there's a payment going to come in on Monday. I know that I'm going to be the first to be paid. And so I'm going to lend this money at 1% over the weekend. And like, that's a real use case on market. So we're starting to see, like, not only the aggregation of real world assets, be it someone coming in with a credit warehouse coming in with car loans or mortgages, but we're kind of also seeing, like, businesses, cardholders coming in for their merchants and being able to say, look, we have information here that we can provide that shows strong credit and can actually forward capital against that.
Give me the pitch on Lombard. Like what is the entire idea here, right? Obviously, we're talking about some lending stuff, but like, when you think of the vision of what you're building,
the pitch for Lombard.
Yeah, like, what's the long-term vision? This is very obvious why this is valuable,
Sure.
right? But I get the sense that this is only one piece of what you ultimately want to build.
Yeah, well, I mean, the world we envision is all Bitcoin living off L1 on L2s effectively. Bitcoin is, the next generation of money. It would be silly to see all assets come on chain and not see Bitcoin become the foundation of the new on-chain financial ecosystem we built, again, on the same primitives and ethos that Bitcoin first introduced. So I think this is kind of the starting point is bring all Bitcoin on chain, let it participate in the financial ecosystem in many different ways. And, from there, maybe where the vision goes, Bitcoin as an ecosystem has been largely void of innovation for quite some time, at least in an on-chain sense. You've seen, I was an investor for a long time. We didn't care about Bitcoin at all. All the innovation was happening in ETH and Solana and wherever else. I think with the introduction of Bitcoin into on-chain financial protocols, that changes. Bitcoin is one of the most principled developer communities in all of the ecosystem. If you introduce them to permissionless innovation in the ways that, like, ordinals and BRC20s and inscriptions did, I think that changes a lot. And maybe just maybe you start to see, innovation come back to the Bitcoin space in a really big way.
When you say bring it on chain, it's a layer 2 on top of Bitcoin. It's some sort of side chain. You're bringing it to another chain. Well, explain that.
We build bridging technology. That's the fundamental idea. We connect Bitcoin to on-chain finance. So we have a Bitcoin bridge that's a consortium of major institutions, OKX, Kraken, Wintermute, DCG, Galaxy, these types of folks. But that's not even good enough. BSA is a new form of bridging technology that allows you to leverage major custodians.
That's Bitcoin Smart Account.
Exactly, yeah, Bitcoin Smart Accounts. But that's just the start of it. But one other thing
you can't ask me any questions because I'm out of my depth already. I'm here to learn.
one other thing I was going to touch on real quick here was just, you mentioned, like, you could wrap a ton of assets together and your banker could give you a loan against that or something. That is a product that you can only get right now if you're super, super rich. The best part about smart contracts.
Not true. I'm not super rich. They tell me something.
Sorry. Yeah, fair. Smart contracts are the most scalable form of financial technology we've ever had. Anybody who can write code can now write whatever financial product that your banker would be able to give you. And that's incredibly powerful.
The one thing I want to highlight quickly, I think we're running out of time, is that this should be very exciting for everyone who is looking into Bitcoin's evolution as a monetary asset. A good monetary asset should also be a good collateral asset. A good monetary asset, as it evolves over time, we should start seeing the market structure getting more developed, which is exactly what we're seeing for Bitcoin. Even if the price hasn't changed that much over the past 2 years, I would say that the credit market has probably 3x, 5x. The Bitcoin options market has probably 10x over the past 2 years. So you're seeing this market structure getting more complex. You're starting to see these other use cases getting kind of developed and more mature. So this should also be very exciting for Bitcoin's trajectory as a monetary asset itself.
We got a minute and 15 seconds. I got told I'm not allowed to go over anymore. Can each of you tell all these smart, amazing, beautiful people, what is the pitch for them to come use it and where do they go?
Sorry, can you repeat, what's the pitch for what?
Morpho.
Okay.
Where can they go use it?
So let me talk about what Morpho is not. Morpho is not a bank. You can think about us as an AWS of credit markets. we enable banks to come online and develop their own credit markets. Every major asset class has had a credit market against it. Banks use gold, Treasury uses repo, security uses margin lending, or equities use margin lending or security lending. And then we have this big asset called Bitcoin that is not being utilized whatsoever. If we took 5% of Bitcoin and use that as collateral on market, we would add hundreds of billions to the open credit market.
Good pitch.
I guess if you want to put your Bitcoin to work in one of a number of ways, you should come talk to me. We have a booth out there. Otherwise, you can find me on Twitter, LinkedIn, or something like this. You can go to Lombard's front end. It gives you an address. You can deposit Bitcoin directly to that. Mint a token that you can mint to one of many chains, and use that to borrow stablecoins on Morpho, or do many other things.
I go very quickly. We're running out of time. Is there a trapdoor or something?
No, go ahead.
Can I go? Well, if you're an institution trying to look for ways to engage in Bitcoin or stable coins, or even the crypto market more broadly, whether that means trading, whether that means lending, whether that means custody, whether that means issuing a stable coin, Anchorage is a regulated partner, and we would love to talk to you.
Amazing. Thank you guys very much. I appreciate it.
Great meeting you.